Welcome to the LawWiser podcast. I'm delighted to have with us today Jan Holthuis. He's senior partner at Buden and also the head of their Asia desk. Buden is one of the Netherlands' leading full service law firms with a strong international practice and a dedicated India desk as well. This is a particularly timely conversation because earlier this year, in the month of May, India and Netherlands elevated their relationship to a strategic partnership, with both countries committing to deeper collaboration across different sectors, including semiconductors, advanced technologies, energy, defense, innovation, etc. At the same time, we are seeing growing interest from Indian businesses looking to expand into Europe, while Dutch companies continue to view India as an increasingly important investment and manufacturing destination. So, against this backdrop, we will discuss today what these developments mean from a legal and business perspective, the opportunities and challenges for companies operating across the India Europe corridor, and the practical considerations businesses should keep in mind as they navigate the cross border investments, partnerships, and expansion. So, the first question is the Indian Prime Minister visited to the Netherlands in May, which resulted in the elevation of India Netherlands ties with 17 agreements signed spanning different sectors. And this strategic partnership roadmap of 2026 to 2030 commits both countries to deepening cooperation in critical and emerging technologies, including semiconductors, space, AI, and quantum computing as well. From a legal and advisory standpoint, what does this milestone mean for businesses and investors on the ground? And how can they best position themselves to leverage the opportunities it is expected to create?
Thank you, Avli, for having me. I'm very happy to contribute to your podcast, and thank you for your question. Indeed, from a Dutch perspective, India has become much more hot than in the previous years. And this meeting between the Indian Prime Minister and our Dutch Foreign Affairs Minister was very, very actual and on the spot. You will see in the Netherlands a revival of the Dutch-India relations, and it has many, many reasons. One of it is that, of course, now people start to acknowledge that India is really a fast-growing economy. And on the other hand, the EU has a lot to offer with many consumers and a big, well-developed market. So the Dutch think that there is a strength that they can match the Indian demand and vice versa. The Dutch are quite good in water management, agriculture, and food production safety. We have quite some knowledge institutions like Wageningen University in this field. We have ASML and the semiconductor sector that is well developed. And of course, the Netherlands is we call it gateway to Europe. We have well-developed logistics and ports, and there is a large talent pool. And on the other hand, you have India, who produces millions of engineers, IT specialists, and scientists. And this is a very attractive combination for software development, AI, and R&D. And that's what the Dutch government has seen to plug into. So this partnership is really an institutional framework in which you have continuous exchanges of communication and dialogue between also the governments. At the same time, this model is what you call a helix model. It is geared at innovation, in which government, company, and knowledge institutions should cooperate. And the fact that it is government promoted is a very important addition. On the other hand, you know that geopolitical situation is a little bit unstable, and from the Netherlands, we want to have a China plus one strategy. So India is a very good alternative and has enormous good potential in developing production at the site, as you can see in the Tata ASML first commercial fabrication of semiconductors. So how can Indian companies best position itself in this respect? I think In this framework, you will see that there are more joint delegations between India and the Netherlands. There are many consultations envisaged on private company and knowledge institutions, and this is really a way to get involved in this drive to innovation and exchange of business opportunities.
Thank you so much for sharing that. By listening at you, this is going to benefit both the countries a lot. But when we talk about the sectors which are the priority in this strategic partnership roadmap 2026 to 2030, which sectors do you believe are best positioned to benefit from this partnership?
I think I think if you look at the potential in software development, AI, I think in the semiconductor business, but also automotive. I think the Netherlands and India, they have both a very good agricultural base in which the Netherlands has a lot of technology and food production safety know-how to share. I guess also the Netherlands is very good in water management. We have a long history in this field and a lot of know-how. So these sectors, I think, are very important for cooperation.
Noted. Thank you so much. And you also talked about the China plus one diversification right now. So we are seeing a lot of global companies increasingly diversifying their supply chains and investments in Asia. How is Netherlands viewing India's growing role in this changing economic landscape?
You know, in the Netherlands, you have in the past quite some uniform supply chain focusing on certain countries, and India is really a angle that has not been really developed up to now. For companies, they look at also a mass supply chain potential. It's very difficult to match the Chinese huge developed supply chain, so you need a big market and a lot of supply infrastructure in order to be able to at least transfer part of your supply chain from one country to the other. On the other hand, in the Netherlands, companies know that if they want to access a new market, just like India, you have to be there. So you have to produce part of your product in that specific country for many reasons. And the Dutch companies will also look for good partners in India in order to make sure that part of the products are going to be produced in India, and maybe part of the know-how will be provided by the Dutch side. That's what we see in other countries as well, and we see that India has a huge potential in this respect. So the cooperation between the Netherlands and India might have different possibilities in which both parties will just contribute would be best to develop your supply chain in India itself. On the other hand, investment by India in Dutch companies with good supply possibilities will provide access to the EU market, and the Netherlands is very good positioned to organize that.
Noted. Thank you so much. Now I'm coming to the second question. As you talked about the ASML and Tata Electronics deal, and it got a lot of headlines here in India as well. It is one of the most prominent outcomes of the visit, the cooperation between ASML and Tata Electronics in connection with the semiconductor space in India. So, what legal, commercial, and strategic considerations typically become important when companies enter into these large scale technology partnerships which involve advanced manufacturing and critical technologies?
Yes, the cooperation between Tata and ASML has indeed hit the headlines, um, and it's a government-supported cooperation, which is very important because for semiconductor technology to be transferred outside Europe to another country, you need export license. What I understand from the cooperation is that the ASML will provide not the newest this you should skip, because I have to check in my notes where I put the right terminology.
Okay.
Because I cannot make a mistake here. Let me see.
Yeah.
Oh yeah, here I am. Yeah, we went too quick. So ASML under this deal will supply advanced lithography equipment in the first commercial semiconductor fab built by Tata Electronics in Dholera. But these are not ASML most advanced machines. It's important to know that, but it will create an enormous production of chips, which cause an important diversification of risk, and it will also have some know-how transfer, but that will be limited. But the fact that this semiconductor project is coming from the ground with the support of both India and the Netherlands is important. You know that in this respect, the build of this know-how will create a new opportunity for production, and it is also given by the risk that we have seen in earlier cases with respect to focusing on one country like China. So this is a very good development, I think, for all parties. But this strategic partnership, Avli, is focused also on micro, small, and mid-sized companies. And here you will have a different field, because these companies will have to often develop further IP. They were looking for financing and venture capital input. And then you have to look at what kind of model you will use for that and how to secure such model. So assuming that this is an innovative product between startups or smaller companies, you have to very carefully look at the background IP. So what kind of contribution will each party bring to the table? And if there is development of IP, who will own the innovative next step know-how? And this has to be agreed, I think, in advance. And it's important to do this on the basis of a sound economic model. So here you have to think about your strategy, I think, from both sides, with respect to IP development, but also financing, and important also the corporate governance of such a venture. You might know that in the Netherlands, it is not necessary to have all your directors located in the Netherlands, so it can be foreign directors, but you have to make a good cooperation structure, a good responsibility, who will do what as from the start, and how to finance the whole part. So we always suggest that if you look at this kind of cooperation, you start with a simple letter of intent, setting out the economic model, make a good business plan for the coming 5 years, make clear what kind of working capital you need, how to finance that working capital, and then how to distribute the profit. And here it's important, but we will get there later, is how to structure this investment from a legal point of view, from a tax point of view, and also important, if you send Dutch people to India, Indian people to the Netherlands, how residence and working permits are organized.
Sure, sure. I think you covered a lot in for my next question also, which was around what role does due diligence on local partners play before entering a joint venture or long-term collaborations from your experience of advising international companies, as you've talked about IP and corporate governance and the financing to look before. Are there any few other things that should be done in due diligence before entering into such long-term agreements?
Yeah, this is important also to add. Then I come to foreign investment screening that might apply. You have export controls that might apply, and that might apply from both ways, right? It might apply from the Dutch point of view, it might apply from the Indian point of view. And in that respect, I should say the advantages is from a tax point of view in the Netherlands quite interesting, but there are some preparatory actions to take. For instance, if there in the corporation in the Netherlands there's control by the Indian party on critical infrastructure in the Netherlands or very sensitive technology, or there are investments in high tech campuses, then you need to prior notify such a venture with the Ministry of Economic Affairs. And the transaction, if it is an investment transaction, will cannot be completed before the notification has had a review from the Dutch side. I'm not aware on how that works in India, but I guess there are some sectors in India where you also have to consider the sector of and the possible restrictions in that sector. For instance, in the Netherlands, if you invest in a Dutch company on quantum technology or photonic technology or semiconductor of software and hardware-based information security products or encrypted communication systems, there might be restrictions that you have to check in advance. And in this respect, it's important that, of course, these screenings are in place, but India is regarded as a reviewed partner. That means it's on equal footing. It is not a restricted destination like you have with China. So the review will be based on a somewhat different criteria. But it's important to prepare and check in advance whether the sector and the investment might be subject to investment screening. On the other hand, if you talk about export of certain technology, and I just gave you some examples of technology, there might be restrictions and you might need a license. And that is a process that is not supervised by our Ministry of Economic Affairs, but it's supervised by our Ministry of Foreign Affairs. So you have to consider these parts.
Sure. Thank you so much. And as you are speaking about the critical technologies right now, how should companies prepare for compliance considerations when they are operating across jurisdictions?
I think Avri, first we have to have a very clear description on the sector in which the corporation takes place and what kind of technology is imported or exported. That might be reviewed in advance. There is a possibility to have some prior opinion, I guess, from early communications with the screening office of economic affairs. They are open to that, so that you don't start the whole process and enter into all kind of cooperation agreements and afterwards you find out that there are restrictions. So it's important from the beginning to do your homework and to check whether there's any review obligation in place. But for instance, if you have a Dutch AI startup and the Indian party delivers IT engineers, they do not invest in shares, there is no decision making, then there is of course no notification requirement. You can just go ahead. Or if both parties co-own developed IP rights in different entities, there's also no notification requirement. Or if an Indian party licenses IP to a Dutch entity that is co-owned by India and Dutch investors to exploit the IP, there's no notification requirements. So there are a lot of models that are outside the scope of this screening, and people focus very clearly first on the restrictions and become afraid. But in practice, I think I'm not aware of any investment, or maybe one investment, that was subject to some conditions in order to proceed. So this is important to understand. And the advantages of the Netherlands in this respect are quite good. We have, and we will get to there later, we have tax advantages that are internationally very competitive.
Sure, sure. We will talk about this later in more detail. Coming to the startups now, a new generation of Indian startups is entering Europe right now. For instance, just to give an example, Namayatri's parent company acquired a Netherlands-based company in March 2026 as its first international move, citing growing India-EU alignment right now. So, as more Indian startups and growth stage companies look towards Europe, what are the key legal and regulatory considerations founders should understand before expanding into the Netherlands and the wider EU market?
Yeah, Avli, this is, I think part of my answer will be similar on what I just said. But startups often have potential for innovation and lack capital. So the capital requirement exploration is important to secure in advance. Otherwise, you will get stuck halfway. Very important is to see who owns and who has existing IP, and who brings in what technology, and is it really owned by that company or not, whether it can be exported or not, and who will deal with the data transfer between India and the EU, because there are regulations in this respect as well. And secondly, once you have started a R&D corporation, Dutch-Indian R&D corporation, then it is so important from the beginning to make good arrangements on how you supervise that development process. So it's important that employees are subject to very clear confidentiality rules, that they transfer their developed know-how back to the company, that the ownership of that know-how is very clearly divided between the parties investing in that venture. And it is maybe a negative approach, but it's not. You have to make very clear from the beginning what's going to happen if the cooperation doesn't work out and you want to terminate the cooperation. Who will get the IP? What is the value of the IP? How to eventually share or not share the profits developed by the joint venture, and make clear from the beginning how to exit in order not to be stuck in a deadlock later on. And finally, in the corporate governance, you have to find a way how to deal with deadlocks if the development doesn't work out as you wanted it to work out. It often happens with newly developed companies. People come, people go, the market might change. You might have a development in the market in which certain technology focus changes to another, and then you need to exit. So you have to be flexible in this kind of corporations.
Right. I'm sure this will be helpful to a lot of founders who are listening to this. And coming to my next question around the region, the Benelux region is increasingly seen as a strategic entry point for Indian businesses right now into Europe. And from your experience, what type of Indian companies are choosing the Netherlands as their European base right now? And what legal regulatory considerations typically influence that choice over other European jurisdictions?
Yeah, we see in the Netherlands, of course, you saw the cooperation in the automotive. You see a lot of cooperation in the software development. We see some strategic investments in logistic companies in order to secure the supply of goods into Europe itself. And it is the Netherlands is really seen as a very good place to organize your headquarters in Europe. It might be that the global headquarter might be in Dubai or in the United Arab Emirates, but still it's so a good suggestion to have your headquarters in the Netherlands, not only to access the European market, but the Netherlands has a wonderful, extensive network of tax treaties that will make sure that there is no capital gain tax, there is no withholding tax on distribution of profits if you have a certain shareholding in a company. And the Netherlands has also an innovation box advantage. What is innovation box? It means that the proceeds from self-developed IP can be subject only to a very low 9% corporate tax schedule. So the Netherlands is used as a kind of base for headquarters or as a joint venture location itself. It is having a very good predictable legal environment. Employees who come from India and they have a certain knowledge degree can opt for 30% ruling, which means that 30% of their salary is not taxed. And the permit provision for the residence permit is based on a predictable application process. So you can in advance see that if you comply with certain conditions, you can have a residence and work permit. Employees can also buy houses if they want or rent houses in the Netherlands. It's all not a problem. So if you go back to what kind of sectors, you can see it from a macro point of view and say we want to have a headquarter, and from there we are going to invest in the other EU countries, or we're going to supply to EU countries. The logistics from the Netherlands to the other EU countries is very good. And if you have investment in companies in other EU states and you want to disinvest or sell or eventually transfer profits, this is non-taxed in the Netherlands. So that is a reason to put your headquarters in the Netherlands. And apart from that, the Netherlands has, as I said, a very interesting and well-developed know-how structure with research institutes in terms of water management, agriculture, I think semiconductor, logistics, and we have also a large talent pool and very good universities. So for Indian companies to attract talent in the Netherlands might be a very good opportunity. Just what we can see from our practice is also that there is really a diverse mix of Indian clients. You have the listed Indian groups, and you are looking to set up a headquarter outside of India, and you have a privately held family businesses, often with significant global operations. That want to organize their international investment through a tax-efficient and legal stable structure. So, and you increasingly see also Indian private equity and family offices that want a respected European jurisdiction as an anchor of their international holding chain. So what they all have in common is that they are looking for a jurisdiction that combines commercial credibility, a strong legal system, and a fiscal efficiency. And when you look at the structural and tax considerations, the Netherlands scores consistently well across all of these dimensions. From a Dutch tax perspective, the participation exemption is a key benefit. In short, it means that if a Dutch BV holds a qualifying interest in a subsidiary, dividends and capital gain from that subsidiary are fully exempt from Dutch corporate income tax. And that means that if you use a Dutch BV as your regional international headquarter, holding subsidiaries worldwide, those profits of those subsidiaries and proceeds from any exit can be retained at a Dutch level and reinvested without any Dutch tax leakage on those flows. What this also means in practice is, suppose you have a Dutch BV and that has subsidiaries, for example, in Germany or Singapore or Brazil. If those subsidiaries are paying dividends to the Dutch BV, or if the Dutch BV sells one of those subsidiaries, no Dutch tax should be due at the level of the Dutch BV and that income. So 100% of those dividends and capital gains remain available for reinvestment in other subsidiaries, as long as those funds are held at the level of the Dutch regional headquarter company. And this is the structure that we see with not only with Indian, but many international companies. It's a well-proven structure. So why should Indian companies then establish headquarters or regional offices or holding structures in the Netherlands? The structure is as follows: that you have the family at the top, which hold the shares, and maybe in the United Arab Emirates entity that functions as the international headquarters company. And in turn, this United Emirates entity hold all shares in the Dutch BV that serves as a regional headquarter company and holds the shares in the operating companies worldwide. And this is key to create a long-term sustainable structure that requires some substance. That means the Dutch entity should have their own office, qualified staff on the payroll, and active management involvement in its subsidiaries to avoid abuse qualification. So letterbox companies do not work in practice. A structure should be properly maintained to qualify for tax benefits. But the profits generated via this structure can be reinvested efficiently at the level of the Dutch BV or the United Arab entity. But if those funds are ultimately repatriated to the Indian company as capital, this may inadverse Indian tax. This might result in Indian tax and regulatory consequences. But this is the structure that works very well, apart from the fact that the Netherlands has strong universities and research institutes, and you can access the EU customers and consumers and the large market, and you have the strong English language skills in the Netherlands. This is more or less what we see in present structures that are invested by Indian global companies in the Netherlands.
Sure. Thank you for sharing a lot of practical advantages which Netherlands has to offer to all the companies. But can you also share like how do Dutch foreign investment screening and regulatory requirements are, and when we compare it with other countries in Europe, how they are different, what investors might expect?
I guess the foreign investment screening of the Netherlands might not differ too much from other countries, because our foreign investment screening law are based on EU laws and the implementation thereof. It's also that if the Netherlands receives a notification of a certain screening, they will transfer this notification also to other EU country offices to see whether that specific country might have views on a certain investment. So the Netherlands will not be much better or worse than other countries in terms of investment screening. The view is that the Netherlands is, however, not so bureaucratic and very practical, and is communicating transparently on how they view certain investments.
Noted. Coming to the last question now, and talking about the firm, Buden has a dedicated India desk, and with the strategic partnership roadmap, the new deals that are happening, and a wave of Indian companies now actively looking at the Netherlands, how is Buden evolving its India-focused practice to support clients? And what trends are you seeing in the sectors and mandates which are driving the activity today from the firm point of view?
Okay, so let's talk a little bit on Buren itself. We have very much an international practice because we have offices in Luxembourg, Netherlands, but also 3 offices in China. We have an integrated approach. That means we deal with tax, with legal, and also with notary. As you might know, that if you do a share transfer of company or setup of a company in the Netherlands, you need a notary to execute the deeds. That's all in-house. Secondly, we are very much looking also not only on the legal, but we give also our views on the practicality of a model in legal terms. And in a very early stage, identify issues like export control or investment screening, but also on IP protection and R&D collaboration and the use of innovators box and tax advantages. And most important, I think, also the corporate governance, because if you have a joint venture between Dutch and Indian, you have also cultural issues to deal with and communication issues to deal with. And we have quite some expertise in this respect. Apart from that, we work with quite a network of India law firms and work in tandem to help with the execution of a collaboration or a transaction. So we have Indian lawyer input and also the Dutch lawyer input, and we are well geared to coordinate this. And finally, I think we have a reasonable fees. We have an international standard, but we are not as expensive as the very big so-called magical firms, although we think we are also magical in our own way. And we have a very hands-on approach and a total service practice. So we would like to engage with parties who consider investment in the Netherlands. And also we have Dutch clients who have international practice and also are active in India. And we work in these projects with Indian firms and we do it successfully. And it will lead to a better understanding of from ourselves into such kind of cooperation and also from the Indian characteristics and the Dutch characteristics in this kind of ventures.
Thank you so much. This is all your answers are surely going to help a lot of Indian companies. And this was the last question. I will end the podcast now. Thank you so much for joining us. It's pleasure. It was a pleasure to have you on our podcast. Thank you.
Thank you, Avli. Very well done.